Welcome to Fear and Greed Summer Investing Series, brought to you by Vanta, specialists in compliance-led growth. I'm Sean Aylmer. It's hard to talk about the local share market and not talk about the big miners. BHP, Rio Tinto and Fortescue metals have long been dominant forces in iron ore, but of course that's not all they do. As always, this is general information only and you should seek independent advice before making investment decisions. Shaun Weick is a senior investment analyst at Wilson Asset Management. Shaun, welcome to Fear and Greed.
Thank you. Great to be here.
They haven't had the best of years the last 12 months or so. The big miners, is it going to get any better?
Yeah, I mean, it's a good question. If you look at sort of, recapping 2024, I mean, the materials index as a broad index has performed poorly. It's down, around 13% versus the All Ords, which is up 17%. So, we think the primary driver has really been around, I guess, lackluster demand in, key commodity consuming markets such as China, and the emergence of, oversupply in some sectors such as lithium and copper. So, we think from here the outlook for commodities is heavily dependent on your views on China, the level of, I suppose, policy intervention that we're likely to see in order to try and stimulate growth, and, I suppose more left field, the impact of tariffs under a Trump regime and what, he's likely to do there. So, yeah, the most recent China data, has continued to be weak, and it has demonstrated, I guess, a clear deceleration in terms of, retail sales, ongoing softness in fixed asset investment and industrial production as well, which, to us really does highlight the reasons why China are trying to get out on the front foot of this, particularly, I guess, ahead of any potential tariffs that are likely to come with Trump.
Yeah, okay. So when we talk about, Fortescue is particularly leveraged to iron ore. It's not quite a pure play, but it's closest to a pure play. What about BHP though? Because obviously they dig up a lot of iron ore and it's a big part of their revenue, but they've got all sorts of other products as well.
Yeah, at this point, we'd prefer the more diversified exposures within the mining space. I mean, iron ore is obviously so heavily dependent on the level at which we're going to see investment within China within the property market. I mean, they have shown through some of their recent, I guess, purported policy actions that housing is a big focus, because at the end of the day, the Chinese consumers' broader wealth and sentiment is so dependent on how the property market's going. So we think iron ore prices probably remain, relatively strong. But yeah, the diversified miners is probably where we'd prefer to be at this point.
What about commodities? Copper, bauxite's another one that's done incredibly well in the last few months. Rio is very exposed to bauxite. I'm trying to get a sense of how important iron ore is to these diversified miners. Can the other commodities make up for it?
At the end of the day, it's iron ore that largely drives, the diversified miners. And, even so, across the broad commodity complex, China's such a central component, we think, to the outlook for these businesses. So, if you're bullish on China and the policy settings that they're likely to enact, which, so far has been more words as opposed to action, then, that it's going to be a good space to be, we believe, in 2025. But, at this point, we're waiting to see some follow through. I think at the moment you're sort of in this period where, you've had some initial announcements and now you've sort of got, about a month or so through to Lunar New Year, and then, China generally goes tools down. And I think we probably hear something, after that. So it feels very short term that, you're not likely to see much more.
What's your take on some of the battery minerals companies? You've talked about lithium a moment ago. Nickel's the other one that's fallen out of bed. But there's been rare earths, things like that. What's the outlook for some of those stocks? Again, it's kind of a bit of a broken record. It's China, I know, but is it all China?
Yeah, I mean, we think the lithium, the supply demand dynamic looks like it is, progressively rebalancing. We've seen a number of significant, shutdowns across the globe, really. So, from here, the demand side of the equation, we do think for lithium is quite dependent on China and, the EV theme and whatnot. And I think, more globally, we are starting to see the emergence of, the thinking around sort of other alternatives outside of lithium for, for vehicles. So, but we're sort of cautiously optimistic that the supply-demand dynamic in lithium is rebalancing, and the equities are probably cheap enough to start dipping your toes in a little bit.
Fantastic. Shaun, thanks for your time this morning.
Thank you.
That was Shaun Weick, Senior Investment Analyst at Wilson Asset Management. Remember to get your own independent advice before making decisions. This is Fear and Greed Summer Investing Series brought to you by Vanta. Vanta automates compliance for frameworks like ISO 27001, SOC 2, CPS 234 and Essential 8, saving time and money while building trust. Join over 8,000 companies like Atlassian, Dovetail and FireAnt managing real-time risk. Get $1,000 off at vanta.com/fear and greed. I'm Sean Aylmer. Enjoy your day.